Good morning to you, live in London. Let us cast our minds forward to US CPI data. We've already established we can't take a lunch break here in Europe today because we have the ECB and US CPI. And US CPI, I mean, we were talking about the short end of the bond market, treasuries. That could be the asset to watch here. What are you watching for?
Yeah, so I think, the idea that the Fed is going to cut interest rates this month is pretty much nailed on at this point. I don't think anybody is expecting anything different. But what we might get if we see a particularly high and surprisingly strong CPI number is the possibility that people take away some of the cuts that are priced in for next year. And so that would lift short-term yields at the 2-year tenor, for example. We've got a lot priced in at this point. We had that big rally in recent days, but we have seen inflation number and jobs data that has been justifying the idea that the Fed needs to get on with it. Maybe Trump's right. But I think it's interesting is to pay attention to what it means to the dollar as well. Is that a strong number going to be supportive if we get a lift in those yields, or are we going to see that depreciation trend start to continue?
Is Lizzie Bergen going to have an exciting day in Frankfurt today?
It seems unlikely, doesn't it? I mean,
you're in Frankfurt.
the ECB's not expected to do anything, sit on its hands. Maybe we'll see some changes in the forecast, but the inflation target is supposed to be kind of within reach, and the economic outlook. Well, there might be some weakness in there, according to Bloomberg Economics, but nothing too exciting there. And I think that, again, so thinking about the euro, people have been watching for a long time. Can it bust out of this recent range, get up to sort of the 120 level, something like that? We're still around 118, I think, there or thereabouts. You have got the idea that the dollar will weaken if the Fed starts to cut interest rates, and with the ECB on hold as well. But people aren't really expressing it. We're being stuck in that range. So poor old Lizzie, I think, going to have a bit of a boring day.
Let's round this out, I guess, to other G10 central banks. Bank of Japan meets next Friday as well. Any fireworks expected there? We had, a headline yesterday that the Bank of Japan is said to see the chance of a hike despite the disruption in politics. Is that where you guys stand?
Yeah, so the market is moving away from that a little bit. It seems that if you look at the rates markets, people starting to move their expectations for when the BOJ next raises interest rates to next year from something priced in for this year. Not everybody agrees. We've got a Citigroup call on the dollar yen, quite aggressively looking for it to go down, several big figures. The idea that the BOJ will still hike this year and that will be supportive for the yen. Again, they were talking about if the Fed is cutting, even if the BOJ stays on hold, it might boost the yen. But if we can get over some of these awkward politics, which the market is sort of thinking its way through, then maybe there's a possibility that the BOJ will be able to get a hike done, and that would be lifting the yen again. But going to have to watch that political sphere pretty carefully because it's going to be pretty tricky in the next few weeks.
Where politics and central banks collide, I guess. Thank you, Paul Dobson, for joining us with your thoughts on the market.